up, what up, what up, what up, what up? It's your boy Comedic Energy, and this is Dirty Mouth Radio. Dirty Mouth Radio, produced by Livewire Sound and Entertainment. We got our boy back in the building. He back in here. Yeah. Everybody introduce themselves right now.
Hey, it's Sade.
Papa Lou.
Golden.
It's your boy Craig.
Yeah. Your boy Papa Lou, Moments with Lou. My man back in the building. Y'all been waiting for this episode. Going crazy, talking about we ain't gonna hit the next finance episode. Well, okay, today's the day, all right? Be happy. My man is here. How's everybody been?
Wonderful.
Word.
We've been sad. I don't know about you.
I mean, today I'm doing a lot better than I have been the last couple of days, but I'm good today.
Yeah, I'm good.
Good.
I mean, yeah, sad, but
I feel you.
Otherwise.
What about you, Craig?
Shoot, out here trying to make these motherfucking team, nigga.
Well, yeah, everybody's kind of down.
These blocks, selling these rocks.
Oh, shut the fuck up.
Come on, man.
Whatever.
Oh, shit.
When
you say rocks, you mean them CDs?
They don't know them.
You said what?
What she found selling boxes of candy?
Oh, my gosh.
I said CDs.
Oh, man. Well, I mean, everybody's down. You know, let's give a little, moment of silence for that man, Kobe Bryant and the family. You know, quick moment of silence right now, man. All right. Yo, so, R.I.P. Our hearts is with the families, Sad situation. Wouldn't wish that on nobody. Straight up. All right, yo. So let's make this happen, man. I'm a student up in here, so I ain't gonna do too much talking. The teacher's in the building. I'm ready to learn a little bit more. But I will say this one thing, man. I've been reading this book called Hustlenomics. It's based off the man Nipsey. It's actually written by Ash Cash. It's pretty much called Hustlenomics, Money Ownership and Business Lessons Inspired by Nipsey Hussle, plus a step-by-step guide on how to implement each principle. So, when the man talks about the victory lap,
Right.
the CD victory lap,
Right.
I was listening on the way here, and I've listened to it so many times. Every time I listen to it, I learn something different from it. But after reading this book and listening to the CD, it makes much more sense of how he laid out each track. And people don't even realize that. The way he methodically went from the intro to the outro throughout the whole CD is based on his whole plan. So the victory lap, it consists of pretty much a whole track. So, you got your 200, your 400, your 800 meters, half a mile, so on and so forth. But each distance is a different principle that you live by. When you get to that marathon is when you get to, I believe it's the philanthropy of it all, when you're talking about giving back. So, I mean, it's real deep. I can't really, I'm speechless with it because you just have to get the book. You really do. He also has different Ermiisms, so principles to live by. He died at 33. He had 33 Ermiisms that he calls it. His name was Ermias. Yeah, Ermias, yeah. So these different principles to live by, I mean, it's pretty deep. He goes real deep into it. He always quotes back to each song that he had. From Mailbox Money to Victory Lap, Slauson Boy, all of his CDs, all his mixtapes and everything, it's all intertwined. It's one big system. And he talks about having an ecosystem. Create an ecosystem with your business. Where, how he talks about all money in and no money out. He lives by that. Everything that you do should be related to your business. Your business should not have to go out, pretty much spend money outside of the company.
Of your company.
Everything should be all money in and no money out. That's where you really retain your wealth. And creating this ecosystem is the vast networks that you can, implement within your company and branch out to different things and put it all under one umbrella. That shit, man, I tell you, that shit was deep, man. Like, It was a real deep book.
Economics, guys. Ooh, there you go.
Yeah, man. But hey, that was my quick comedic history moment, man. Lou, the floor is all yours, brother.
Oh man. Well, you see, we jumping right into it. So, well, what's interesting? So that principle, the ecosystem analogy, is very interesting to me. A country boy, understanding the agriculture industry and knowing farmers, the most like successful farms, they might specialize in like one particular product, but they create an entire ecosystem. So, give you an example. If you want to sell hay, right? You want to be a hay farmer. You want to sell hay. Well, in order to get good hay, you got to get good grass. So how do you get good grass? Well, you need some cows, right?
Yeah.
You're also going to need some goats because goats eat wild forestry and they keep the bad grass from creeping in on your good grass, right? You're going to need some chickens because chickens eat grub worms, which keep your good grass from getting infested with grub worms. It's just interesting how farmers create these ecosystems. Like you said, now they have all these different byproducts. They can sell milk. They can utilize milk. They can utilize goat milk for cheese. You know, that's just kind of a physical example of the whole concept of creating an ecosystem within business structure.
I see what you're saying.
You know, and if you look at a lot of the top performing businesses in this country, that principle is very true. They figure out ways on how to take every business expense that they know that they're going to encounter and figure out a way to keep that money in-house. Coming from the aviation industry, one of the things that I see, a lot of airlines tend to own their own contract vending companies.
Yeah.
So, like Delta Airlines, right? They own a company called DGS, Delta Global Service, which is their in-house contracting company. Those employees work for a vendor that does contract work in their smaller stations, i.e. Charlotte.
Yeah.
But all that money stays in-house.
Exactly. So that's deep.
So, on the whole concept of keeping money in-house,
Yeah.
right? I think where we left off, I was talking about budgets, right?
Yeah.
We got into budgets and you know, figuring out that monthly household budget in order to figure out, okay, well, how much extra money do we have coming in, right?
Yeah.
And then, you know, I also touched on the whole, and then utilizing that tool to get as close to debt-free as possible to where at least, if nothing else, a mortgage. And then that's whenever you free up money to invest. Because one thing about it is investing is no different than going to Vegas, right? Especially if you want to talk about investing in the market.
Yeah.
Investing in anything.
Yeah.
There's no 100% sure guarantee investment. Even real estate can be
Risky.
especially when the markets are overdue for a correction.
Yeah.
Kind of like what we're in right now. But I would always caution people, you never want to invest or play around with investing if you don't have a stable footing financially in the crib. Meaning, once again, going back, if you're paying a bunch of credit card debt, student loans, if you have a lot of liabilities
Yeah.
that you have going on, you need to get control of those liabilities, eliminate those, so that way you free up that money in order to gain assets. Right?
Makes sense.
Yeah.
Because what good is it if you save up money, right, and you don't pay off a student loan or exuberant amount of credit
They
card
gonna
debt,
come and get that.
right? Right.
Yeah.
But you take that money and you put it into a particular stock, and the stock does well, and all of a sudden, boom, it tanks.
Yeah.
Right? And you
Money.
look, damn. And now you back to square one. You still got this student loan hanging out there. Which is why I would always tell people personally, because the plan that I implemented for me was to get as much consumer debt eliminated as possible.
Yeah.
Simply because from a financial aspect, you're how do they say? It's a slippery slope.
Uh-huh.
It's a slippery slope because essentially you're investing money that you really don't have
I see what you're saying.
from a debt to income ratio. So then I kind of branched off into like market stuff, right? And a lot of people wonder about the market. And there's kind of this thing that I learned from a brother that, of course I have to shout out my sources. It's a brother on Instagram by the name of Wall Street Trapper.
Wall Street Trapper. Okay.
Yeah. It's Wall_Street_Trapper.
Okay.
This brother pretty much either he himself or he grew up in some hustlenomics. You know what I'm saying?
Yeah.
From the block.
Yeah.
And essentially, because a lot of people don't realize, I mean, that's a basic kind of thing. If you know anything about the game, right?
Yeah.
We just call it the game.
Yeah.
Believe it or not, most cats who have been in the game actually make very good business
Yeah.
decisions.
Oh, yeah.
Right?
Yeah.
From just business principle.
Yeah.
Now, when we talk about legal decisions, now it's a whole different, you know what I'm saying, logical things.
Yeah.
But they really do understand some of the most basic business principles. And this brother, he really breaks stuff down, particularly about the stock market, into a way that most people from the urban community can understand.
Okay.
And he has this this set of tips, right, about before you buy stocks, things to do. And I'm sharing with you. So number one, it says to understand how exactly the company makes money. So find a company that you want to invest in, right? So then you need to figure out, okay, how do they make money? So I use an example, a real-time example. Back here towards the middle of 2019, the big ticker was Beyond Meat.
Yeah.
Right?
Yeah.
Beyond Meat exploded. Their IPO, on their opening IPO date, I believe the stock was at like $25 a share. And within like not even a week's time, it was in the hundreds.
Wow.
And I bought some. I bought some because I was like, I want in on this,
Yeah,
right?
yeah.
Because the whole plant-based movement is a big thing, especially in doing research of a company. So key one, what do they do? How do they make money? Well, they make their money by selling a product, a plant-based product, a meat alternative, right?
Exactly.
And then understanding where they are within the business. And so they went from not being publicly traded, just, and just being in supermarkets to now being offered at resorts and hotels.
Yeah.
Them along with, what's the other one? The Impossible Burger.
Yeah.
Impossible has deals with like Burger King.
They had the restaurants.
So
other
Impossible is different than Beyond. I thought it was all Beyond Meat.
Nah, two different companies.
Companies.
And Impossible really they really went down like the plant-based meat science nerd spectrum.
Yeah.
Because Impossible figured out a way to utilize an enzyme that is present in soy.
Oh.
So, and to anybody who is like on the fence with soy, I mean, you eat what you eat. This ain't really about nutrition. We're just talking about finance now.
Yeah.
So apparently, soybeans produce this enzyme that is a part of their whole like photosynthesis thing that has the ability to it when it hits the open air, it coagulates and turns a different color.
Oh, wow.
Which is why Impossible's kind of thing compared to any other plant-based meat company was that they had the ability to mimic what meat looked like. So you could like legit get like an Impossible steak. We'll just say, I don't think they have steaks, but let's say they made steaks, right?
Yeah.
And let's say you're a person who's always liked your steak with a little bit of pink in it.
Yeah.
With the Impossible meat, you can do that. Like
It's like mirroring everything.
yeah.
Wow.
Yeah.
But what about we really wasn't talking about the nutrition, but what about the flavor? I ain't into this.
So I had the Impossible Burger when I went to
love
St.
it.
Martin, right?
I like it.
and it tasted good. I ain't gonna front. It was
Yeah,
good.
I
I've
like
had
it.
Beyond Meat products. They were good. The only thing that, because I didn't understand the science of Impossible, it was just kind of freaking me out. Cause I was like, man, this is meat.
Yeah.
Yeah.
This is meat.
I like
man.
it, but if you're a real meat eater, like my brother just had Impossible not too long ago, he was like, "Nah, I'm not a fan. Give me a burger." But me, I'll be like, "Yeah, let's do it. Like I'm gonna eat it."
Yeah.
So,
Yeah.
I mean, it's all about what you want and what you want for your life. I
Right.
guess.
Yeah, that's true.
Yeah, but once again, two of the top companies.
Yeah.
Which Impossible, they kept saying that they were going to have an IPO. They haven't had one yet.
Now, for people that don't know, what is an IPO?
Initial public offering or opening, and that is whenever a company decides to go publicly
Public.
traded
Yeah.
on the stock market.
Okay.
Before an IPO, any investing in a company comes from a privatized source,
Oh, okay.
be it a bank,
Yeah.
your homie, your what's the popular thing now? Crowdfunding.
Yeah.
You know what I mean?
Yeah.
And once they make money, really fine tune their business model, and essentially can produce a clear plan for projected growth
Yeah.
and an actual valuation of the company. So the company is valued here, right, based on their net earnings for a certain amount of time, potential growth therein. Then they decide, okay, we want to go public with it, right? Because now going public, you're now getting more people to invest in
Buy
the brand
into
and
it.
to buy into it, which gives that company access to more capital to do whatever it is that they do.
Yeah. Okay.
So, so with that, so understand how exactly the company makes money. Then two, identify if it's just a hot stock or if it's a growing industry, right?
Yeah.
So once again, the plant-based movement. Me personally, I think it falls in the middle. Just using this example, because the plant-based movement itself is growing, but I think sometimes the products within that can kind of be
Fall off.
Yeah, they fall off.
Yeah,
They
yeah.
fall off.
Something better may come
Something
along.
better comes
Yeah.
along. People get disinterested.
Yeah.
Just kind of like it's the flavor of the week,
Yeah.
right? But you gotta. Once again, that goes back to that whole the gamble, risk versus reward type deal.
Yeah.
So then once you identify whether or not if it's something that you just want to get in for a minute, make a little money, and then have an exit strategy. So like for me, I knew I bought in at $25 a share, and I was like, my top number was like, if it can go up to $130, I'll be good.
Wow.
The thing shot up to $252 a share.
Damn.
It peaked out at $252 a share. And I probably should have sold in.
In a year?
Say that one more time, Craig.
What was the time frame between that time?
What was the time frame?
So
How long
we're
it took?
talking. That was around. So I bought the stock. So it was before my birthday. So we'll say I bought the stock around like May, right,
Of last year?
of last year.
Okay.
May of 2019. And then shortly after my birthday, so this would say August. So between May and August, the thing peaked out to over $252 a share, right?
3 months? Sheesh.
With and what's interesting about it, which is why I thought it was a valuable investment because it had steady growth. It didn't just go, you know what I
Yeah.
mean? It would go a few points, chill for a minute, then go a few more points. And so I probably should have sold at that top number, but I didn't because I got greedy. I was like, this about to hit for real.
Yeah.
And then it dropped down to like 170 something.
Still past your 130.
Right.
Yeah.
I think I ended up selling right at around like the 160 mark or something like that.
So
Okay.
my biggest question, and I'm like a beginner investor, right? When it's all about buying and selling. We know that.
Right.
Now, when you buy, I know you could buy per share, of course.
Right.
When you sell, are you selling all your shares or are you selling?
No.
You don't sell all your shares.
The same way you can put in, if you go, like I use Fidelity, right? Just to use Fidelity. So when you go to buy, excuse me, it'll ask how many shares. You type in as many as you want. Now when you go to sell, here's the thing. Sell all or sell a portion. If you click sell a portion, it'll ask you how many do you want to sell,
Okay.
right? And that's what you can do. I did that with GoPro. I bought in the GoPro at $2.60-something. It went up to like $8 and change. I sold all but like 3 shares of GoPro. Right? And I had these last 3 shares just because I knew when they were releasing the Hero 7 and the other stuff, I was like, maybe this would be cool. But unfortunately, that's the gamble with tech stocks and tech companies.
Yeah.
There's always somebody with a newer and better product on the line.
Yeah. Okay.
So, but yeah, you can sell as many or all the shares as you want. You don't necessarily have to liquidate all of them. You know what I'm saying? So if you want to,
Okay.
let's say you want to sell some to make some capital,
Yeah.
right?
Yeah.
And you hold on to some because you're like, this thing could go back, it could rebound, it could go back, go a little bit further, But yeah, so you don't necessarily have to sell all the shares up front.
That's interesting. Okay. That's where I get kind of messed up at. I buy it and I hold it. And I don't give it away.
So that's the thing, right? So buying individual stocks is an interesting game because it takes a lot of research.
Yeah.
Researching a company, evaluating a company, going on. I had to go on YouTube and learn how to read candlestick charts, which chart growth and and it's crazy, but it's like Vegas for me, right? Okay, cool. I'm gonna put a few dollars down on this company.
Yeah.
Right.
Yeah.
And if it hit enough, and if I can make $100, I'll take the $100. That's the quick flip, right?
Yeah. Yeah.
More long-term investment is more suited, in my opinion, for like mutual funds.
Okay.
Because with mutual funds, rather than buying a single stock, you're pooling your money into a fund that invests in a conglomerate of stocks.
Yeah. Okay.
Right?
Yeah.
And with mutual funds, there's kind of a set it and forget it method.
Yeah.
So let's say you got $1,000 that you want to invest in mutual funds, right? And so you say, all right, mutual funds. So then you would spread that $1,000 in a percentage. So you want to put 50% into the middle, right?
Yeah.
So or medium, kind of slightly conservative stocks. 25% in more aggressive stocks,
That's what you're saying.
right? And then 25% in super conservative stocks.
Okay.
And by doing that, what happens is, regardless of how the market dips or swings, most people who do that tend to make money regardless of what's going on with the market. Right?
Makes sense.
You know what I'm saying? And so and Dave Ramsey really goes into detail with it, with the actual terminology, aggressive growth in income, moderate aggressive. Those are the actual financial terms that they use in the market.
Okay.
But they're recognizable. If you ever wonder, like, okay, well, what is an aggressive stock? It's usually your large cap, large cap mutual funds, right? And then you have international as well. So that's more of a long-term thing.
Okay.
And I would definitely say that is the realm that I would always suggest to pay the money and seek a professional. Someone who really watches that stuff like for a living.
Yeah.
Who can guide you and honestly and teach you. You know what I'm saying? Like the one thing I say, if you're gonna do business with any person in the finance industry, make sure that they have the heart of a teacher. Right? They're not just there to get your money. They actually want to teach you something, right?
Yeah.
Mentor you so that you can possibly take that knowledge and transfer it on to someone else.
That makes sense. Yeah.
But yeah, so I don't deal too much with the quick flip stuff just because that is like timing is key.
Yeah.
And unless you are like a legit day trader at the crib with 2 computer screens and you looking at stuff second by second, you can end up missing out, right? Like you might have bought at a good time.
Yeah.
It peaked, but you was at work on the line doing what you do.
Yeah,
you ain't know.
Yeah.
You come back and guess what? The thing done fell through the roof.
Damn.
Right? And so at that point, here's what you have to remember. A lot of people, and it took me a minute to understand this, when it comes to buying stocks, you don't actually lose money until you sell the stock.
Oh, really?
Right? So
Oh, okay, that makes sense.
as far
Yeah,
as
that makes sense.
if the stock went below what you paid for it,
Yeah.
at that point, as long as you still own it, you haven't
Really, it's necessarily
lost anything.
And it has the potential to
And
go
it
back
has
up.
the potential to go back up, right?
Yeah.
But one thing I've been learning, right? Especially getting away from the quick flip stuff, I worry less about necessarily a company's stock value. I want the dividend rate.
Yeah, that's what I look at.
Okay?
Yeah.
Because that's where your real cheddar comes in.
Yeah.
That's when you making money in your sleep.
Yeah.
That and I like playing the dividend game because the dividend game can actually buy your freedom.
Yeah.
And I'll touch on that in a minute.
Okay.
But so the third principle was to find out if and when did that company fall on hard times and how did their management react and adjust. So
Yeah, that's some research right there. Okay.
Yeah.
it is.
Yeah.
But the thing is though, a lot of that stuff is public record, right?
Yeah, yeah.
Anybody that's publicly traded on any market, they have to release those annual and quarterly reports.
Yeah.
All of that type of stuff. And they have to show the strategy. So if they fell on some hard times, they have to show the strategy of their plan, like how they bounce back. Right? Or did they just say, fuck it and close up shop? You know what I'm saying? Temporarily and then come back. I would never put my money in anything like that.
Right. Yeah.
Because what happens is the CEOs and the top shareholders, they had their golden parachute and everybody else just
Falling by the
fall
wayside.
by the wayside. Then you got to figure out how much of the business that you'd like to own. You got to figure out, do I want 1 share, 2 shares, 3 shares, whatever, right?
Okay.
And then finally, get off your ass and just pull the plug. Do it. A lot of times we spend a lot of time looking into things, right? Because we're like, man, I want to get into that. But then we don't never like take that jump,
take the initiative.
right? We don't ever take that jump.
Yeah.
I'm guilty of it. I'm guilty of it. And it was when I learned that at the end of the day, me not actually taking a step forward, I'm still standing on the same corner.
Right. Yeah.
Right? If you want to leave where you are, at some point you got to put at least 8 foot forward.
I see what you're saying.
You know what I'm saying?
Yeah.
So once you know what I'm saying, you do a little research, and you don't have to necessarily be a market analyst. it's a plethora of stuff on YouTube. They can teach you how to evaluate a stock like in the layman's way. That's how I had to learn how to do it.
Yeah.
To decide whether or not I would like to put my money into this company. And more than anything, that gut feeling. If it feels good and it looks good, go for it. But if it don't look good and you don't really feel it, then leave it alone.
Yeah.
You know?
That's
So
what you're saying.
now, I talked about buying back your freedom, right?
Yeah.
With the dividend game.
Okay.
All right, so once again, the same brother that I was talking about, he had a post up, and he was talking about happy hour, right? Say a lot of us like happy hour. We like to go out, have a few drinks or whatnot.
Yeah.
And he outlined a company like Brown Foreman, right? Which is the parent company of Jack Daniels, Woodford
Yeah.
Reserve. It's a
Yeah.
liquor company, right? And then, of course, Coke,
Yeah.
right? Both of those companies are companies that pay dividends. So if you buy, a decent amount of their stock, and when I say decent amount, at least, $400 to $500 worth of it, the way that they pay out their dividends, you essentially can pay for your happy hour
I see what you're saying.
with your dividend
Yeah.
paycheck.
Yeah.
Same thing with your cell phone bill.
Okay.
Verizon, AT&T, they all pay
So they
dividends.
pay you basically because you buying into.
Yeah, you buying into the
So
company.
basically,
Service.
once they profit, you profit too, and
Yeah.
you're getting your share of the profit.
Yeah. So
So because I like Pumas, I should buy some stock and they might give me some dividends.
look
I heard
around.
they also give free merch too.
Yeah, so like a lot of the sneaker companies, I know Nike for sure, because that's how my accountant flipped the game on me. He kept seeing me come in with fresh J's when I was in that phase of my life.
I remember you said that.
Yeah, man. And then he was like, "Yo, how many shares do you own?" I was like, "Nah, I don't." And he's like, "Yo, bro, every time you buy a pair of sneakers, you need to drop some money on the share of the stock. You buy a pair of sneakers, because on average, most sneaker companies, a pair of sneakers is usually around the price of one share of their stock,
Okay.
right? So if you do your due diligence, you got your budget, you saving your money,
Yeah.
all right, cool. I want them Jordan 4s that's dropping next week.
Yeah.
All right, cool.
Yeah.
Well, be dedicated. You got some principle about yourself. Be dedicated. So, all right, cool. I'm going to buy the sneakers and I'm going to buy a share of the
That
stock.
share.
Right? Because here's the thing. Whether you're a sneaker collector or not, at the end of the day, we all buy shoes.
Yeah.
Right?
Yeah.
And eventually, over time, you will find yourself that you have bought enough shares that qualify you in the shareholder pool to get free merch from that company. Now, I'm not saying they're going to send you a pair of Jordans, but they send you something.
Yeah.
Yeah.
To get
Right.
something is, yeah.
As an investor, you know what I'm saying?
Yeah.
On top of their dividend rate. If they pay dividends, you get your dividend deposit
Yeah.
into whatever account you use, whatever brokerage account you use. You know what I'm saying? So at the end of the day, the whole principle is that to shift the mindset of being 100% consumers and being more of investors.
Right.
I see
Right?
what you're saying.
So how you communicate that to your homie in the hood is like, yo, you flip it on him. Like, look, bro, we around here, we like to wear Louis. We got these Louis belts on, and Louis bags, right?
Yeah.
And we showing off at the club for the shorties.
Yeah.
But, like, how much more you think you can show off when you be like, yo, like
I own some
I
shares
actually
in
own
Louis.
some shares of this company.
Yeah.
So I'm really out here, I'm promoting my brand. You know what I'm saying? You
yeah,
feel me?
Yeah, I see what
Yeah.
you're saying.
Yeah.
That to me, that's invaluable.
Yeah.
You know what I'm saying? And which insider tip about Louis Vuitton, Hennessy, Remy Martin, Rihanna, she her Fenty beauty
Fenty.
line, her lingerie line, all of that is underneath the same ticker, LVMUJ,
Wow.
on the stock market. They own all that.
Really?
Yeah.
Yeah, I need my freedom back.
So, you know what I'm saying? But the thing is, and the way that it was projected, the way her makeup took off, they were like, "Yo, the lingerie is set to outperform Victoria's Secret."
Yeah.
Right.
Yeah.
So with knowing that information, right, when you want to put a few dollars in that,
Exactly.
Right.
right,
Yeah.
when you want to get that, last time I checked, it was like 1.9 something percent dividend, almost 2%.
Damn, are you serious?
Yeah. You know what I'm saying?
Damn. I ain't
So,
know that.
I mean, dividends is where it's at.
Yeah,
Man.
it is.
It really. I never forget my first dividend deposit,
Mm-hmm.
and I was like, "Oh, I kind of like that."
Well, give us an example.
As far as
I mean, because I'm sure you didn't had a lot of dividends by now, like
so, all right, so
people can have an idea.
So, all right, check it. So, with what stock was that? Oh, Apple Real Estate, which is a REIT. Which REITs are cool too. If you want to get into investing in real estate without necessarily being a landlord and having to figure out how to renovate a property and all of that, you can invest in REITs, which is it's a real estate investment fund.
Okay.
That would like a group of real estate people investing in one
Or
thing?
a company.
Company, okay.
The brother who paid for everybody's college tuition at Morehouse.
At Morehouse.
Yeah.
Okay.
His company is a real estate investment company.
Okay.
He's publicly traded online. It's RJK Holdings.
Okay.
I invested in it because he owns over like 600 hotels all over the United States.
Wow.
Which means he owns property that is always moving.
Yeah.
Yeah.
Right?
Yep.
It's always moving. I know the likelihood of me being able to build my own hotel is, I ain't. Let me take that back. I can do
I about to say,
it.
you could do you can do all
So I can
things.
do all the things.
You can do all the things.
Yeah, I appreciate that. We're gonna put that in.
We gonna bring that energy back.
Yeah.
You just don't wish to pursue it at this time.
Right.
Okay.
Right. But it's like, okay, this brother over here, this is what he do.
Yeah.
He know more about it.
Yeah.
Well, I'm gonna throw a few dollars in his company,
Yeah.
so I can get my dividend of it.
That's true.
Right? And it's a way to invest in real estate without having the liability of trying to buy houses and flip them and all that.
Being a limited partner.
Yeah, you know what I'm
Just,
saying?
Yeah, investment.
Because what you don't want is to be like T-Pain.
Yeah, I heard about
You know,
that.
his family members was like, didn't know nothing about real estate, but just be like, see a house for sale. Hey man, this would be a good investment.
Yeah.
We just throw a fresh coat of paint on it and sell it, and
Yeah.
it didn't work out like that. So,
Damn.
so from Apple Real Estate, which was a company that I invested in, a REIT that I invested in, and I think I probably put roughly about maybe $4,000 into them. Over the course of like 5 years, just constantly.
Okay, just constantly
You know what I'm
putting
saying?
in.
And
Just
let me
small
put
gains.
that in there too. A lot of people get so focused on like this big number, they don't realize that it's all a little bit
It's
at a
over time. Whatever
Right.
you can,
Whatever
over
you
time.
can. You know, it's like
Small gains.
my it's the old analogy. They say, how do you eat an elephant? One bite at a time, bro.
Yeah.
Just one bite at a time. So
That's true.
So yeah, over the course of, let's say 4 or 5 years, I put that type of money into, and then one day, because your dividend is based on the shares you own. So
Yeah.
you know what I'm saying? It's whatever the dividend rate is times how
How
many
many
shares
shares.
you have,
Yeah.
right? So the more shares you have, of course, your dividend check, because
Bigger.
that means you're more vested into
Yeah.
the company, which is only fair.
I had an issue like that with Disney. I don't
Right.
know if I said it on the last episode,
Uh-huh.
but I bought shares into Disney, and I did it through the Stash app.
Right.
Before I knew it, I stopped for a minute, but I still kept seeing them emails saying, "Oh, you just got some dividend." All right, and then I just happened to look on it again. I had $40.
Right.
I was like, "Well, goddamn, keep this shit rolling."
Tank of gas, you know what I mean?
Yeah.
Or $40 to put back into
Exactly.
to
Yep.
you know what I'm saying? Because at the end of the day, you can now grow that 40 to 80 at
Yeah.
some point,
Yep.
Yeah.
right?
Yeah.
Because that's based on the law of averages with investing.
Yeah.
You know, in these like 6-year cycles. So every 6 years, money doubles.
So let me ask you something. How much, what percentage of the shares, like how much shares would you have to have for them to make you like a board member or something like that? Or for them to look at you like, you own too much of this?
So that's an interesting question. So with that, yeah, you gotta have a lot of shares. to be a
I about to
board
say you gotta
member,
put it in a lot.
Okay.
I'm
And
sure.
generally speaking, you know, for an existing company, their board members are comprised of people who were the upfront partners.
Right.
That
Or
was
family or
that was
something.
that cat
Them A1 day ones.
who had, you know, a whole bunch of capital,
Yeah.
right? So, like, let's say, you know, you're trying to get your apparel company, like, really off the ground,
Yeah.
right? And to do it in a manner to go from production to the market. And that take money,
Yeah.
right? Like, I had a pleasure of meeting the brother who is the CEO of the Social Status brand.
Yeah.
And he has done several projects with Nike on shoes where they
Yeah.
have a social status edition of a shoe. They did a Jordan 6 for All-Star.
Yeah, I
They just
remember that.
released a Air Force One. But he was breaking it down on how, like, the shoe, yeah, it was released last week, but we've been working on this thing for 18, 19 months,
Wow.
Wow.
right?
Yeah.
So product design is deep, but so you're trying to launch your clothing brand.
Yeah.
That dude or those dudes or whoever that have access to a couple 100,000, they can say, yo, here's 250,000, here's 150,000. I want 5% stake. I want 10%
It's
stake.
that Shark Tank shit.
That's
That's
that
what
Shark
I was
Tank
about to
shit.
say.
Bingo. Prime example. That is Shark Tank.
Yeah.
Right.
Yeah.
That's exactly what it is. That's usually when, you know what I'm saying, that those first board members are,
Already got
you know, in an
Foot in the
existing
game.
company,
Yeah.
right?
Okay.
Right? Now, moving forward, a lot of times those titles change as the money shifts.
Yeah.
So if this guy, he really has no interest. Them shark guys, they ain't got no long-term interest.
They just
Yeah.
want to make
They want to get your company off the ground. They want to see it make some money
Yeah.
so they can get their money plus their whatever percentage back.
Yeah.
Get out.
And then they give you an option. Like, okay, you want to buy me out? You want to? And usually by then, if your numbers have looked good, you might be able to approach them and say, yo, man, you made your money. I'm interested in buying you out. So that way now you become the top shareholder, right?
You don't owe nobody.
Right, you know what I'm saying? And then you can dub, from there, yo, man,
Yeah.
I want you to be on my board of directors. But generally speaking, you want people on your board of directors who have access to capital.
Yeah.
So when you do fall on hard times, you have
You
a way.
still got somebody to hold
You have
up.
a way to float the bills,
Yeah.
so to say. But I mean, once again, it's not unheard of for a random person off the street who just continually invested in the company
To become that.
to become that. I mean, especially if a company kind of, I don't want to say dies out, but loses traction,
Yeah.
but they're able to stay above water, right? And then that person just keeps putting money into it every paycheck or whatever, and then lo and behold, this person in Sally, South Carolina that nobody's ever heard of becomes the top shareholder of Popeyes. That's how that kind of thing tends to happen.
Damn.
So, but yeah, from my overall investment in that real estate, in that REIT, I ended up getting a dividend check for a little over $800.
Damn.
Okay.
You know what I'm saying? And I took a portion of it to pay off a credit card that I needed to pay off, and then the rest of it, man, I just rolled it back into the stock. You know what I mean?
Yeah.
Let it,
Smart
grow
move.
some more.
Yeah.
So yeah, the dividend game is a strong game, but it just, once again, I tell people it's kind of like earlier. It's a marathon, man. It's not a sprint,
Yeah.
and it really comes from being diligent about some of the most basic principles of discipline. It's really what it boils down to. It's really what it boils down to.
Damn,
So,
man.
Interesting.
Very, very. So, what are some other like investments that you would recommend besides just stock?
okay. So, life insurance,
Okay.
right?
I just read this guy, Morrison.
Mm-hmm.
So he was saying something about buying into life insurance, and then you can use that as equity.
Yes.
And it's basically like you're being your own bank. And a lot of people, yeah. So I've been,
How does that work?
yeah. It was very interesting.
Really?
Like,
Okay, so
You're your
Go,
own
Lou.
equity.
yeah, like you're your
so
own bank.
I don't know all the details of it, but from just thinking about it from a strategic mindset, like how does that work? Well, I mean, it's a basic principle. At that point with life insurance, right? You have placed a value on your life.
Yeah, yeah.
You all right? And so
Yeah.
then the financial institutions will say, okay, well, you're worth $250,000, right? That's a general life insurance policy,
Yeah, yeah.
right? You and your intellectual property is that valuation, and so now you can show up to the different institutions that invest in things and people based on their value,
Wow.
right?
Okay.
So yeah, that's kind of
I see what you're
you know what I mean. And there's probably
That's a
some
lot to take in.
there's some holes to my explanation because I'm not 100% informed on it, but it's probably one of the oldest tricks in the book.
Really?
But that's the reason why so many people invest in life insurance though too.
A lot of us don't know it, and that's what he was
Yeah.
saying. Like
Yeah.
that's what people have been doing way back
Way
when.
before that, yeah.
We just don't. A lot of
So-
us don't know about it.
Isn't that how Trump got the money he got through life
That
insurance?
and I think like $1 million loan from his pops.
Yeah.
It's like I remember when I left High Point, my mama, gave me $40 and a clean pair of drawers and said, "Go make some of yourself." You know what I'm saying? Like, I'm joking.
Yeah.
My mama didn't do that. My mama did not do that. My mama did not do that. She did way more than that, and I love you, mama.
Yeah.
But for the affluent, you know what I'm saying? Like
Yeah.
it's not far fetched
Yeah.
where their father, mother, and family, as a parting gift for graduating college or whatever.
Yeah.
Yo, here is this chunk of change. Go make something of yourself,
Yeah.
right? You've watched us. You know we know you can be smart with this money. Go do something with it.
Yeah.
You know what I'm saying? And that's the whole principle. There's only such a small percent in this life, in this world, of the like overnight wealth stories.
Uh-huh.
The majority of wealth in the world is generational. It comes from
Yeah.
from
The family.
the family doing their due diligence to guard whatever it is, this asset that we own,
Yeah.
to transfer it, right? And one of those is life insurance. And I mean, that's, I might have touched on this last time, but once again, Walmart,
Yeah.
major company.
Yeah.
And in the fine print of your employment package, when you get hired, because that's the thing, they have to disclose this. They can't hide it from you. Think about it. You need a social security number to get a job, right?
Yeah.
You need a birth certificate with your date of birth and all this pertinent information. Everything that you need to get that job now has in order to get a life insurance policy on you.
Damn, that's crazy.
So whether you work for them for 1 day or 40 years, they continue to pay the premiums on your life insurance policy.
Wow.
And that when your time has come and you call to glory or whatever you believe in,
Yeah.
that corporation, i.e. Walmart, the beneficiary of the life insurance policy that they hold on your behalf, gets
Yeah.
a check.
Damn.
That's real trifling.
It is, but
But I
It's
say
shrewd business,
that
pretty
I
much.
say that to say that life insurance is a tool
yeah.
that you know what I'm saying, and I have my own opinions.
I have questions about life insurance because it's like, okay, you got the whole life insurance policy, and then you got the term.
Right.
So basically, what I was kind of taught was like, you want to get the term.
Yes.
You don't want to get it for your whole life, because by the time you want to get the money so that you can invest in it, basically, so that you won't be needing life insurance. You shouldn't want to need life insurance.
Right.
So,
And my thing, I was just about to touch on it. I was going to say, I in my research,
Yeah.
I've learned that term is generally the better option because of what the sister just said, but also because, how can I put this? Would you rather pay 20 times the amount for the same policy?
No.
right.
Right.
No.
Usually with whole life policies, you
Yeah.
end up paying 20 times
Yeah.
the amount,
They're gonna pay you
Overpaying,
out,
right.
okay,
right? Over the
term of your
The-
life of your life
of the policy
right.
than you would if you just get a term life insurance policy. So that, to me, that is cash in the garbage can,
Right.
right?
Yeah.
Just get the term. You know what I mean? And some people, would argue, well, what happens when the term runs out? Blah, 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 blah. Hey, man, you get car insurance. You ain't having a wreck every day.
Yeah.
It is what it is.
Yeah.
But once again, though, but you still have this system of equity that you can tap into.
True.
You know what I'm saying? So,
But this is explain this to me again, because okay. So basically, when you get in a life insurance policy, they saying that you are worth X amount of dollars.
essentially.
So when I want to go to invest in something, I'm saying I'm putting my life on the line for X amount of dollars.
Yeah, and so
God.
well, not even that. Okay, so that's like that's the way it sounds, right? In just in like real talk ways, but from a financial aspect, essentially, let's change the wording of that. I'm not necessarily putting my life on the line, but I now have a liquid
I
form
was
of
about to say,
collateral.
I'm worth this.
I have a liquid form of collateral.
But to me, when you say I'm worth this means somebody might try to cash the
But
check.
ain't nobody gotta know.
Lifestyle originals,
I mean,
okay?
no. I feel
Ain't
you.
nobody
I feel
gotta
you.
know.
Yo, what was that episode of Martin when he got the life insurance and he kept thinking Gina was trying to kill him? And when he sold Tommy the policy, he said, "Hell, I'll kill you." Oh man, but that's the beauty of it, right? Even in comedy, right? That exposes, unfortunately, a mindset in our
Yeah.
community,
Yeah.
right? We got to shift the mindset,
Yeah.
right? Because we spend so much time now. I ain't no life insurance. They gonna try to knock me off,
Yeah.
right?
Yeah.
But then when you do
It
get
do
knocked
knock
off,
on your door.
right?
GoFundMe.
And you
That should not.
selling
Right.
fish plates, GoFundMe's.
Yeah.
Ain't and them got to put third lien on they crib.
Yeah, your body in the thing.
You know,
Yeah.
and which so that's a whole nother thing. There are funeral companies on the stock market.
Really?
Yes.
You know what?
What?
You know what? If I could deal with death like that, I would think about being a mortician, but I can't.
Yeah, I got a friend. I
So
went
once
to high
again,
school
no,
with.
but see, that's the beauty of the market. You can't deal with death.
But you can put money
Check
in
this
it.
out.
People gonna die all the time. Right.
Service Corporation International, SCI, is a funeral home. It's a stock.
Wow.
Wow.
I'm believing that what they do is so they offer carriage services. So when you go to funerals and you see like the horse and carriage,
Yeah.
Okay, because I was gonna say, what about a casket company too?
cemetery services. Last time I checked, and it's probably gone up, but in the state of North Carolina, the average opening and closing of a grave, right? Because that's separate.
Right.
Really?
From the actual.
From
yeah.
the actual. Oh, bro, I'm about to break this.
From the services.
So we about to go deep now. We talking about life insurance.
That's why I just want to get
So-
cremated. I ain't gonna even do that to
So,
my family.
which I'm gonna touch on that.
Okay.
You pay the funeral home for the services and embalming and all of that,
Yeah,
but
yeah.
you have to pay the cemetery to come out and dig the hole and close the hole.
Really?
The opening and closing fee must be paid in full, or else you can't get buried. Cuz $1,300 for them to dig a hole,
Are you serious?
6 by 6 by 6.
Just to throw somebody's body.
Yeah. I said, damn, that give me a shovel, cuz.
Yeah, for real.
Right.
But I can't dig a perfect square, so it ain't gonna come out right.
They
But
probably got a stencil.
right, just nah, for real, they
No,
do.
serious.
They do.
Yeah.
They got that little thing that they drag behind the truck.
Yeah.
Right.
When you go to the
It's a
grave
stencil.
site,
Yeah.
them brothers that be up the hill usually
Mm-hmm.
in that old truck, that's their job. Open and close the grave.
Like through the cremation process, is it the
No.
same process? You still gotta pay.
Nah, so
Much was it?
So like that's why this is why. So so you got your life insurance, right?
Yeah.
And your loved one passes away. Do not go into that funeral home and talk open numbers. They're gonna ask you, do you have life insurance? Yes, I do. Or how much is the policy? Don't worry about that.
Don't worry about that.
Just know that I got life insurance. Because their job is to get you to spend as much of that money as possible.
Right.
Okay.
And then they play on your sympathy so
On
they
the,
know you're
right,
grieving.
yeah. On the cheap end, a traditional funeral, on the cheap end, going the cheapest of the cheapest of the cheapest, it's gonna cost you about $8 grand.
Damn.
Well, I'm sorry, at the funeral home, plus opening, closing, plus a headstone, plus all the other incidentals. So you're looking at 10 racks. We say 10 racks
Damn.
for a traditional funeral, right?
Right.
You can go get cremated for $2,500.
Yep.
And guess what? So now let's say you got a $250,000 life insurance policy. I'm just gonna lowball you because that's just kind of average number.
Yeah.
Because most of the times, you should always have at least enough life insurance to at least pay the mortgage in full, right?
Yeah.
So that way your loved one don't have a mortgage no more. So $250,000 life insurance policy, right? It only costs you $2,500 to get cremated.
Right.
Then that means the rest of that life insurance money can be utilized to settle your estate, because that's the part that a lot of people don't talk about is after the crying and after the procession and all of
Still
that,
got
reality
all that.
kicks back in.
Yeah.
That loved one, if they still owe money on stuff, you have to settle the estate. And like settling the estate is crazy because in North Carolina, there's a part of settling the estate where you have to run that loved one's name in the paper for like 30 days, a 30-day ad in the newspaper, basically saying such and such passed away.
He did.
If this person owed you anything, you have 30 days
All right, to claim that
to
shit?
go down to the county services department
Word.
and put in your claim
Of what they owe you.
of what they owe you.
Are you serious?
Right. So if there's back taxes owed on housing, if there, credit
Oh,
card
they coming
debt.
to get theirs.
Yeah, no, bro. Just because you died, like they say, when they say the show goes on,
It go to
Yeah.
your heirs. It
it
passes down.
moves over. So that's the thing. Life insurance is not just important for the actual burial,
Yeah.
but that's how we settle the estate.
Right.
Damn.
So let's say that after it's all said and done, you $2,500 of cremation fees. Let's say this person had a remaining outstanding balance of debt of $10,000, right? All of that money was paid out of the life insurance policy, out of the $250,000. We take the rest of that, and if you're smart, reinvest it, right?
Yeah.
So that we can live off interest of it,
Yeah.
right? And bottom line, it's a wealth building tool,
Damn.
right? That's literally how life insurance works if it's done right, if it's done correctly. You know what I'm saying? When they start cutting them checks,
Yeah.
it continues to help the family.
God damn. yo.
Man, when I tell you my grandma was a G,
Usually grandmas are.
Yeah.
Shout out to
Yeah.
my grandma.
I made a post about my grandma today. Me and Tasha, we were just having like a family history discussion last night, and when my grandmother passed away in 2009, and I was in Providence, Rhode Island, doing a speech at the Providence campus for Johnson and Wales, which is one of my alma maters, and I got the phone call from my mama. And we were kind of expecting it, so I had to rush home and whatnot.
Yeah.
And here I was thinking like, okay, shit about to get real, it's about to hit the fan, blah blah blah. My grandmother learned from the mistakes that the family made in regards with my grandfather and my aunt Louise, who passed away. She went out, got life insurance, kept it paid up, did everything. When I tell you, my grandmother had her own funeral planned out to the T.
Are you serious?
Like, yeah, when she was like, you know what I'm saying, when she knew she was really going downhill, she sat down and she wrote it out on paper.
Damn.
Put it in an envelope, sealed it up, and mailed it to the gentleman who sold her the life insurance policy.
What?
Mr. Cam Critterbaugh. She actually bought the house from him and everything, because Mr. Critterbaugh owned half of High Point back home. But anyway, I never forget, Mr. Critterbaugh walked in to the funeral home that day, and we all sitting there. Everybody's like, okay, what are we going to do? Everybody started trying to church up money.
Yeah.
This was before, really GoFundMe's, like, how we going to do this? People talking about putting liens on the crib.
Yeah.
Mr. Critterbaugh walked in with 2 envelopes. One was the life insurance policy. The other was her detailed instructions. My grandma picked out her casket. She picked out what she wanted to wear. She had who she wanted to do her hair, who she wanted to do her makeup.
But that's how it should be.
You know what I'm saying?
Yeah.
Like,
That's how it should be.
right. And so 2 things.
The family be going through too much at that
Right,
time.
2 things. It takes the pressure off of figuring out how we gonna pay for this, how's this
Right.
gonna happen. And then guess what? Everybody got to actually sit back and breathe and grieve and process the loss of Minibel.
Exactly.
Yeah.
You know what I'm saying? So
Damn.
that was a lesson that I took on life insurance early.
Yeah.
It wasn't until I started learning more about it from an investment tool strategy. I just knew that, this shit is important
Yeah.
to keep, you know what I'm saying? And in one of the things in her will and all of that, she made it explicitly stated that there would be no disbursements of any funds until all of her
Estate was
That's
paid.
estate was
Yeah.
settled
Yeah.
and everything.
Damn.
So, granted, my family, we don't argue over stuff like that in general.
Yeah.
Anyway, that's just not how we are.
Yeah.
But even if that would have come up, it did it that.
Right, because
Yeah,
you
'cause she
don't
said
know who
what she
people are
said.
until something like that
It
happens.
happened, right? Yeah,
Damn.
yeah, But I took, that was a big lesson that I took in her passing about, it's funny in the black community, we go to church and we sing these songs, say, get your house in order.
Yeah. Get that in order.
It's true.
What a way to end this, man. So pretty much, the summary of this, look into your different types of investments. There's more than just stocks.
Yeah.
Clear as day. So, this ain't over. So now we got the segment Moments with Papa Lou. Talking about finance and everything else, man. So, this was a damn good episode. Hey, I thank you, man.
Man, I
Yeah.
appreciate, you inviting me, man. Like it goes back, man. There's nothing by chance.
Yeah.
That day at work, man.
Yeah.
I was just going to go get my little coffee. And
Yeah.
you told me about it. And we just had a conversation that turned into this, man. So I'm
Exactly.
grateful for the opportunity, man.
It's all good, man. And there's more to come. So stay tuned, y'all. Like I said, man, this is Dirty Mouth Radio, produced by Livewire Sound and Entertainment. This your boy, Comedic Energy.
Sade.
Papa Lou.
All right now. Yip, we out. Peace. This show was produced by Livewire Sound and Entertainment. If you're looking to rent premium sound equipment for your next concert or podcast at a low price, go to www.livewiresoundent.com.